We begin with two big stories tonight. Walmart hitting a fresh all-time high after raising its sales forecast for the full year on strength outside the grocery aisle. We'll get more on that in just a moment. But first, Nvidia shares popping nearly 5% and closing just $3 shy of its own record. The move comes ahead of its earnings report tomorrow night. Shares are up 17% since its last report. Should we expect more gains for the AI darling? Wall Street certainly expects more gains. They've been hiking the price target, hiking estimates going into this number.
Look, we have for Pavlov's dog. We follow this. We've been trained to expect this. The question is how big of a beat. Karen has been saying this. We know it's going to be a beat. I just get back to where I look at the multiple on the stock and where the growth is, and where the growth is at least very comfortably to me until the end of 26. Everything we got out of hyperscalers, everything we know about capex, everything we've heard the company reassure us, and unless the company, who I think at times has been overly conservative, if you think about what they've been telling us each time, why wouldn't you believe them when they talk about production issues? When you think about where GPU capacity is and ultimately where there is a constraint, where you think about both consumption and where we are in terms of building out power and data in this country, I'm going to just hold my nose and say I think the stock's going to do okay tomorrow. I don't expect it. It doesn't need to rally 10%. It needs to hold these levels.
Wedbush says expect another drop the mic quarter. That's quite a setup, Grasso.
Yeah, it sounds like it's set up a little too high bar, I would say, for them. And eventually, it's going to not have a great earnings cycle. But if you think about it, who are their top 5 clients? And I bet you 80% of those top 5 or 8 clients are making their own chips. You have now a delay on top of a delay. You have an overheating of the Blackwell chip. You have there's a lot of headwinds that probably can be penetrated. They have 85% market share still, but it's theirs to lose. So I don't feel comfortable buying it here. I'm going to stay static on that.
There have been some doubts about Blackwell and whether or not we're going to see some slippage in the quarter in terms of whether it be production delays or overheating concerns, things like that.
Well, Tim talked about that. That's not a problem in that it's the demand that's a problem, if there's a problem, which I don't think there will be. But the bar's getting higher. I would have sort of preferred to have be lower. So on today's strength, I sold some upside calls, used the money to buy some downside puts, just because of the way the skew is, that people are far more bullish than bearish. So you could get a put much closer to the money than you can.
That sounds so sensible, by the way.
Are you kicking yourself? You're thinking tomorrow morning, there's time.
It might even be better tomorrow. I think it went out a little worse than where.
Except now everyone's followed Karen into this trade, and that
Right. So that I hate when the bar goes up, but I do still think. We're in early-ish innings. Not that there couldn't be some sort of hiccup, but
that's only up 200% for the year. It's not a lot, right?
Yeah, it's nothing. I mean, no, the story is still very much intact. I don't know what ends up being the right valuation, but even with that option trade, net, I am long going into this.
Right. How important is this for the overall market? It's very important.
I think it's very important. And look, I think a lot of other people, recently I've been sort of inclined to look for the broadening trade and fade some of these big names. I will say with these big names, I am trying to sort of look through any one earnings print. What I am generally seeing in my data is that even though the value trade kind of fights back, the mega cap growth names keep coming back and showing their earnings dominance. I started to get questions on stagflation recently as people have sort of been debating, is inflation coming back? We're starting to get some concern that the Fed's not going to cut quite as much, tariffs, et cetera, et cetera. And these mega cap growth names, go to secular growth when cyclical growth gets stuck. And so I can see sort of the macro, sort of tailwinds coming back to these secular growth.
Oh, so the defensive trade comes back into play, the defensive element of these larger cap names.
I think so. If you think, we're sort of looking at interest rate pressure and inflation coming back, typically when GDP is sort of squishy, so not negative, but below 2%, that's when growth and large cap tend to outperform. So, macro tailwinds could be returning to these, despite the fact, the crowded positioning and the valuations don't look great.
We have to take the growth, not just in terms of the revenue and the addressable market that we all know is going on both in their core, in the AI world, but also their core GPU. But think about this was a company that made 39 cents a share in 22. So the final full year number was 39 cents, and they're expected to grow at $5 a share in 27. So the profitability of this company is not only up more than, what is that? 14-fold, 15-fold. But it's a dynamic where I think we get the sense that their ability to hold margin for the next few years is there. That's why when I look to the out year and I see a 30 times multiple and I look at it relative to the peers, peers within that semi group. I mean, if you're going to own semis, which one are you going to own? I mean, really, I think a lot of other boats have been pulled up by this tide, and I wouldn't be, I certainly wouldn't be chasing some of the ones that we question whether second or third place, and we know who's, not even in third place anymore, and their ticker begins with an I. So I like the earnings story. I like the multiple, but I like the margin story to be something that can hold here relative to the peers.